Wes. What's up, everybody? Hopefully everybody's having a fantastic week. We got a lot of stuff to talk about today. Doing a mic check. Hopefully everything's good on my end. I just did a restart. Everything should be okay. Speed's good. Everything looks good. All right, so Mr. Bitcoin really hasn't done a whole lot of nothing if we go take a look at the weekly chart here. I mean, this week. Obviously, Bitcoin has done a whole lot the last 4 weeks. It's been a pretty massive move lower. Everybody's afraid. I'm seeing fractals come back. People are discussing how this cycle looks exactly like the 2022 cycle. All that good stuff. The 4-year model or the 4-year cycle model caused the bear market. And then, of course, you got global liquidity is in a downturn after a 6-year cycle. I don't know. Here's the way I look at it, guys. We've literally been short, or if you're following this channel, we put out a video that was a short video because I know not everybody loves my long format. Very short, little, 8-minute video saying sell Friday's high. If you did that, then that means you took the short right here at 111. So you're setting pretty if you're holding a short futures position at 111. In my opinion, there's no point to close that trade. There's no point to add to that trade. There's nothing to do. That's the long-term positioning on Bitcoin. If you're short from 111, hold it and add to it in the next few weeks. Not right now, but in a few weeks when we get a nice bounce and everybody switches back to bull mode, that's when we're going to be looking to add to our shorts. Because if it is the 4-year market cycle that's causing Bitcoin to roll over, or if it is global liquidity that's causing Bitcoin to roll over, or if the Fed is cutting interest rates because they know something bad is coming, like a recession, if it's any of those reasons, then we definitely want to add to the short. We don't want to be buying. We want to buy at bear market lows, or convert the money we make on the shorts. We want to convert that cash to Bitcoin. And that's how I accumulated a lot of Bitcoin back in 2022. I went from having little Bitcoin to having a whole lot of Bitcoin because we started shorting early in 2022. And then we caught the year open retest in 2022 that was in April. We caught that one too. So we literally caught both of the massive big pushes on Bitcoin in the last bear market. Now, obviously, I don't think a bear market is coming, but it doesn't matter what I think. I trade the technicals, and the technicals told us weeks ago to start looking for shorts or at least get defensively positioned. So here is the weekly chart. If we get rid of all those ugly lines and just throw on one simple indicator, and that would be the 21 exponential, boom, 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 then yeah, when you closed back under it right here, you should have been very, very cautious, or at least concerned, right? At least concerned. So on the first close under, we don't get freaked out because we're either going to see this low get violated and downside continuation, or if we trade as an inside candle, there's a good chance you're going to close back above. And literally, that's what we were expecting to happen this week. It was this week that we were super interested in. It was a massively important week because we wanted to see it bounce from this area. And it didn't bounce from that area. In fact, it continued lower. And that's basically when everything changed for us. All right, so yeah, there's nothing to do here. This is a holiday week, so Thursday is Thanksgiving. Happy Thanksgiving to all my Americans or anybody across the world that looks at that holiday. Happy Thanksgiving. But it's a holiday week, and then Friday you're going to have a half a day of trade. So 3.5 days. The VIX is highly elevated. The expected move for this week on 3.5 days was 140 points. It's a massive move for the risk markets on a very shortened week. And since liquidity is thin, you can see very big moves. You can see hardly any move, or you can see massive moves, right? That's generally the way light liquidity works, or thinly traded markets. So when I use the term liquidity, I'm talking about order flow. When Howell uses the term liquidity, he's talking about global macro fundage. It's two totally different things. We focus on order flow here. We focus on the technicals and order flow because it gives us the opportunity to get ready for big moves early. Maybe not as early as some folks would like, but generally speaking, you don't want to be looking for shorts when you have a massive expansion and fresh breakout of all-time highs, breaking above and closing above resistance. That's not a short signal. That's usually a long signal. All right. There wasn't no point to look for the bearish trade here. And basically, Trump's tweet is what caused the Black Swan event where we liquidated $10 billion worth of liquidity. That money never came back this day right here. That money never came back. So basically, we made a lower high bounce, took out this low, gave us one good daily close under, but then it bounced right back to this, which was that trappy condition. I wanted to see the markets bounce right in here on this day. Did not happen. We fact pushed lower, broke down, gave a downside continuation move. So literally when I put that video out, this was that Friday swing high right there. 111.066. That was the area you should have been looking to trade. It was such an easy short. It was literally watch that high, and when price tags it, you hit the sell button. That's how easy it was. And then it pretty much rolled over, and then here we are now. So we're under January's low. That's not great. We have not made a fresh yearly low yet. That's not great. We're rejecting today because we got news. That news wasn't great. The news that we got today was a PPI at 8:30, and we also got retail sales right here. So they were expecting a jump up in PPI. That's not good. Well, they got their forecast, and they were expecting a drop in retail sales. They were forecasting a 0.4% drop, and instead what we got was a 0.2% drop. That's why you're seeing a little bit of weakness today. We usually don't really care about the 8:30 news because it really matters what New York does, and New York doesn't come online till 9:30. So right now you're testing yesterday's open. You haven't really done anything massive here. So you could bounce here, but I'm not looking for that. You're retesting the weekly open. If we go down on into the intra-week and intraday time frames, let's get rid of the moving average. We no longer need that bad boy. You can see here you've lost the weekly VWAP. The weekly order flow has been weak. Not, when I say weekly and weak, obviously I mean weak, like W-E-A-K, weak, very weak. It couldn't break out above the Jan low. That acted as resistance. Price came back in, bounced off the weekly VWAP, and put in a lower high. That's not what we want to see. We want to see when the bounce happens, we get a higher high after that. We didn't do that, and we've gotten a lower high since. So right here is a very important level. Your weekly low is right here. So if you're trading under 86,808, which is your weekly open, there is a chance you're heading to the weekly low. So it makes it a very difficult long today on Bitcoin if it's trading under the week open. If it rejects to go lower here, this could be a buying opportunity, because if we go over and take a look at our favorite shitcoin, Mr. Fart, the Fartster, Fartatronics, the Fart coin, very fun asset to trade. It has a nice volume, trades multiple million tokens per 24-hour basis. Nice, big, gigantic moves. It's just a fantastic speculative vehicle to generate consistent revenues. That is why Fartcoin is traded. It isn't traded on future potential or what its white papers say. It's literally traded because it's such a great asset to generate to generate revenue. Well, we just liquidated last week's high on Fartcoin. That's a big bounce. So last week, pretty nasty downside continuation break. Now you've liquidated that swing high. So if Fartcoin's going to roll over, we would expect that to happen here. So we did initially when we came up in here, we did institute that short position. And we're going to hold that position until we get stopped out. Stop is setting right above high of day. Now, when the bell happens at 9:30, we could ultimately see another spike up into that area. So generally speaking, if you are looking for this scalp today on Fartcoin and you think it's going to go lower, you could wait for that, or you could look at another objective level, like maybe hourly res. I don't like this structure as far as for shorts. Obviously, you have a lot of bullish momentum here. If you look at the RSI on the hourly, you are overbought. Not really where I want to look for shorts, right? Generally, if I'm going to short into bullish momentum, I want to do that after momentum has exhausted. We have not exhausted that momentum yet. So we could see another run above this high. If that happens and I get stopped out, I'll put another short trade on it if it rejects again. As the way I trade, I split my risk into $30 increments. I'm risking $30 in the attempt to make $300. So, and I give myself 3 attempts at taking the trade. So my max loss on the day is $100 to try to make at least a minimum of $300. So it's like a 1 to 2 or a 3 to 1 risk to reward. But sometimes I know the first short or the first long doesn't work out. It's impossible for us to see into the future. Sometimes we get a little bit early, right? The trade might not be until 10 or 10:30. But here's the thing. If it's pushing with bullish momentum above last week's high, like if you're seeing it push and make fresh high after fresh high, it's probably not a short. It's probably not a short, and I don't have another level for you to watch. Yeah. That up there could be looked at as a potential supply zone, but I think this thing has been, like, if you look where you lost your weekly 21, it has been extended and a long way away from this average for a long time, right? You initially lost it back in August, early August. You retested it once here, and since then you've not been back to retest it. So if this is the mean, then there is a good chance that it eventually retests this level again. So this would be the area for me to look for, like a macro short position, like a long-term short trade, if it gets all the way back up there. So as you can see, looking for shorts down here at 30 cents might not be the best short. If the bulls have control of it, maybe the best short is way up there. We don't know. We don't know where demand, where supply will be. We'll just watch it, and we'll keep, we'll take the trade today, see what happens. Another asset that I've been watching for the last few days, XMR. This is another one that basically I signaled for people to start looking for the short. I didn't buy into the Saturday and Sunday bullish momentum that we got. I honestly thought that was just a short squeeze or a liquidity run. I think it got overly extended to the downside, and it was a one-sided trade. And when you have one-sided markets like that, sometimes you get aggressive pops. Even though I didn't really like the short anymore here once we broke back above the weekly VWAP, but we're right here opened a brand new week, right? We got a brand new week right here. So now we're trading it on the order flow that is being presented to us this week. We don't give a shit about last week. Could it find support here at last week's VWAP? Yes, it could, obviously. Hopefully it doesn't, but we'll see what it does, right? I'm pretty sure this fib is a nothing. It is a nothing. Okay, perfect. So basically the reason we like the short and the signal that I posted on Twitter was the midpoint of the month. So basically it got pushed very low down here. This was almost I think it was like a 15 or a 16% drop. And then this big bounce right here happened. You can see it basically just traded up to the monthly midpoint. And the way I trade, if it fails to go above that, that's going to be resistance for me, or a massive objective level to keep an eye on. Because if the month is going to close out bullish, then it should have no trouble breaking out above that point. But if that point ultimately holds, then that tells me that the sellers are still interested, and they're extremely interested up at these prices. If we look at the session volume profile, you can see we had more volume traded on Sunday than we had on Friday. And Friday was a reversal day. So here's Friday. So the initial Asian session open for the daily range was a bullish run, and then it dropped. And then London session, they bought it. New York came online and they were selling it, but the London buyers defended their position. So this is why you had a large volume spike on this day, because it's a reversal day, right? Usually on reversal days, you get more volume because it's in price discovery. This began a short squeeze, so less volume, but on this day, there was more volume traded than on this day. And look where the point of control is, right up against that midpoint. So that told me I wasn't the only one looking at that trade. That's why we were looking for the short here. So hopefully you got into that position. I took the short initially on Sunday, added to it yesterday when we did the live stream. Clearly that got stopped out, but I added to it again. All right, because as long as you're trading under that, I want to hold a short. So I did take a small loss initially, but now that position is up nicely. So if it breaks down or starts to break back down and then starts to trend like ZEC, like Litecoin, because ZEC, Litecoin, and Dash are all in this asset same sector, and they're all getting beat up right now. Litecoin is trading on the lows. Here's your daily chart for Litecoin. You're literally trading on lows right now. Looks like it's getting ready to break down here, or at the very minimum, you could see downside continuation. And then Dash and ZEC also broke down last week. We shorted ZEC. We made money on that trade. But XMR gave us this big, gigantic short squeeze, and now we had a new opportunity on XMR. And I also posted about Bitcoin Cash, or what was it? Bitcoin Cash. What is that ticker? BCH. I don't know, because I got mad at him yesterday, so I deleted him. I was short Bitcoin Cash yesterday. I got stopped out. And now, as you can see today, nice, it's back down. So we kind of figured it was going to roll over, but we didn't know for sure. Same thing, gigantic short squeeze took place on Friday. That printed a weekly bullish engulfing candle. Held support at the year open. I mean, this right here looks like a buying opportunity, not a selling opportunity. But I don't believe it. I don't believe it because it all happened literally on one day. If that took place over a period of, I don't know, the whole week, like this, boom, 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 then I would believe it. But since it was all in one day, I don't buy it. I don't buy it at all. Feels like manipulation to me, but unfortunately, I'm no longer in that trade. But I do, as long as Bitcoin, as long as everything is bearish, I think you can be short on the assets that aren't like up 1,000,000%. Please leave those alone. Those are, you're going to have those. Those are going to happen, right? That's just crypto. The crypto markets are very volatile. But A lot of people saying, is it the 4-year cycle, or saying that it is the 4-year cycle model. Okay, I can get on board with that. Then you got Howell making his new runs. He just went on a podcast extraordinaire. I seen him on 3 different podcasts in the span of 2 days talking about global liquidity cycles. Yeah, okay, maybe, right? It can be anything. It doesn't really matter. What matters is where we are right now, and where we are right now is at $86,000. So I don't think you should, if we are in the beginning of what is getting ready to be a very nasty 2026, then maybe wait towards, like, I don't know, Q3 to start accumulating Bitcoin. If you want to accumulate Bitcoin because it's off, 30 some percent, you can do that. Just be aware of your risks. I did start buying MicroStrategy, and obviously now's not a good time to buy MicroStrategy if we're going into an extended period of risk like next year. But what I would likely want to see here is at least a pullback before it rolls back over again. If this is going to play out like the cycle did back in 2022, remember, after Bitcoin made that initial drop, when you lost the 50% or the 50 EMA, when you lost that moving average, that was pretty much the signal that the bull market could be over, right? Here, I'll show you. Let me use Bitstamp because I don't have a lot of lines on the Bitstamp. And what lines I do have, I don't care about. But we can pull up the moving averages here. I just want the 20 and the 50 for now. I want to show you. So right here, like this same signal this week would have put us on edge. And then how Bitcoin refused to trade and closed weeklies back above, that had us really on edge. We actually started shorting way out there based on the Fed and the 4-year market cycle last time. But anyways, see when you lost the 50 right here, this candle broke through and closed down near the lows. You had 1 week of an inside week and then one more week of continuation. So literally when you lost the weekly 50, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 weeks passed by before the new short setup presented itself, which was right here, because this was retesting the year open. So this close was a trap. We shorted that. We shorted that swing because it was retesting the year open, which was right in here. What? No, he's got to refresh. Yeah, I have sound. My stuff is telling me I have sound. If you have no sound, refresh your YouTube screen. But anyways, you had 11 weeks here where Bitcoin traded sideways and very, very choppy. If we go over to where we are now, here is where we lost the 50. Now, there was one point in time when this bull market started where we did lose the 50 in 2023. And that was an important period for me to see if we were going to continue to go lower or if Bitcoin was going to move up. And that point in time is right here. And even back then, you can see many weeks, 1, 2, 3, 4, 5, 6, 7, before you got back above. So many weeks took place before we had our next signal. And that would have been, as long as it holds as support, that would have been the long, right? That's what we would have been looking for back there. But so right here, back in 2023 in August, we thought we may be done for a brief period of time. Here, much different. Like you full on closed below, full on made the midpoint at the 50. That's a legit breakdown. And it's definitely a legit breakdown if the very next week gives you downside continuation. So what that simply means is when you do finally get that weekly close under the 50 or the 20, like it's the same scenario. We will then watch that low. And if price violates that low and pushes lower, that's the key right there. Continuation. Then the everything has changed. Everything has changed. So you're likely to see, because you're going into December. December is a very volatile period in the markets because you have people that are adjusting portfolios for year-end taxes. You have other people buying for 2026. Like, you just have a whole lot of positioning that's taking place in December. So we're likely going to see a lot of this stuff. You know what I mean? Just a lot of chop. Just be careful and expect that. If you are looking to catch the second wave of selling, it's likely to happen over in here, right? It's not likely going to take place here. It's not going to just dump. Now, can it just dump? Of course it can. Of course it can. If everybody starts to assume that the bull market is over and they start bailing on their Bitcoin, that could cause a nasty move lower. Absolutely. But if the markets are going to trade like the markets usually trade, I mean, all you got to do is just look back to the last bear market we got in Bitcoin right here. I mean, even after it broke through the 20, it traded sideways for a lot of weeks before it then broke back out to the upside. One thing it never did here was it never lost the 50. Even though it did drop over 30% off the highs, it still never lost the 50. And that's why we did not get super bearish there. This is a whole different scenario. Whole different. In fact, you got a daily death cross. I mean, the daily death cross looks more like 2022's than it does any other death cross that you've gotten recently, right? Look how high the death cross happened above price. Like, that's a huge distance. All the other death crosses happened right at price. Like, price was literally trading at the cross. Different. Over here, like, getting ready to cross. Price is in the moving averages. So it's just different. Different. Now you have the cross, and a lot of downside continuation happened after the cross. So everybody was looking for a bounce on the bearish death cross. Doesn't make sense, but that's what everybody was doing because of a few, I don't know why. That's a bearish signal, not a bullish signal. You're looking to buy like weekly oversold. That's when you're looking to start adding. But even then, you know that it can go down for 10 more weeks after it hits oversold. So this isn't a bullish signal. That's a bearish signal. But anyways, here we are today. Still trying to hold support intraday at yesterday's open. I don't know that it will hold support, but that is what is going on inside what we're seeing here. Dollar got hammered a little bit, but it did bounce. I'm actually watching to see if the dollar bounces. Let me go over here. So we're watching these daily lows right here. Clearly we're well below those, right? But the signal on the near term is still up. Okay, so you're above the 50 on your RSI daily time frame. That's usually bullish momentum, not bearish. You're above the weekly here, 21. That means you're above the weekly 50 on the RSI. That's not bearish. That's bullish. So this is a pullback. Last week was a bullish breakout. and we will trade it as a bullish breakout until you get under last week's low. You need to signal that this was a trap before you can get back to bearish on the dollar. You can go ahead and start shorting if you want. If you think the dollar is going down, you can go ahead and short it. But as of right now, the signal is to look for longs. So if it fails to push on day lows, so what I mean by that is intraday here, we have this was your fresh day low, right? That was your day low. You just made another fresh day low. So if you continue to do that, if you continue to push on lows and make fresh day lows, then clearly this is not a buy. If you do not make fresh day lows, this is probably a buy, not a sell. It's scary to buy it because there's a lot of bearish momentum. I get that on the intraday. Yeah, it's bearish. It's nasty. I mean, it's a breakdown. And you rejected August's high. That's the resistance. That's literally what's causing resistance here. There's August's high. So we go back into the daily chart. 1, 2, 3 days of rejecting August's high. We liquidated August's high back here. This is when we put on the USD Swissy short, dollar Swissy. We shorted it on this day, saying if the dollar rejects this price and goes back down into the range, we want to hold shorts from there. Now, even though the dollar came back up and liquidated this, the USD short on USD Swissy is still open. I did not get stopped out, and neither should you have. But it does look like we're going to. So I'm still holding short euro dollar, because if the dollar breaks out here, I do want to be holding that euro position. I want to be short euro dollar because dollar breaking out means euro dollar going down. But if the dollar rejects here, then I want the euro dollar short to get stopped out eventually, and I want the euro Swissy or dollar Swissy short to pay me on the breakdown. You're still in a multi-month range on the dollar. As long as you're trading under August's high, you're in literally like a 6-month range here. So we haven't done anything yet, but a clean breakout above this point with bullish continuation, which is what you're likely going to get if this doesn't break down. If this doesn't break down, and if you don't get downside continuation tomorrow, you're likely going to see a big breakout and then probably a multi-day push, right? Because this is setting up a trap. If it is going higher. But I will go back to being near-term short side bias on the dollar if we start closing dailies back under this. This reaction right here told me I do not want to have near-term bearish bias on the dollar, even though we're rejecting off a resistance here. To me, it's just a liquidation of the lows. Right now, you could be literally setting the weekly low today. Like, this could be the long for the week on dollar. Just make sure you adjust your risk, or you situate your risk so if that's wrong, you don't take a lot of losses. But the market still had, the market did open, sorry. Okay, so we're 7 minutes in. Still have not pushed on highs on Fartcoin. But we're still not dropping on Fartcoin either. I think the short will work on Fartcoin if the dollar breaks out. That's a lot of bullish momentum. We'll see what happens. But favorite trades right now, obviously XMR. But obviously, this sucks, man. But I did post this on Twitter. If you don't follow me on Twitter, it's literally trade_talk_. Here is my handle on Twitter. Follow me over there, because when I see trade setups, right here, when I see trade setups, I will post them. And I don't delete them when they don't work. because I'm a real trader. I'm not, yeah. I'm not trying to hide anything. But here's that XMR post. Right there's the midpoint. So as long as you're trading under that, sell it. We're still trading under that. Right here's that. So as long as we're trading under that, I want to be holding a short. And I am short. So there's that. All right. MicroStrategy looking rough. Struggling here. And another thing that I'm actually looking at for a potential bounce trade only. This trade could take a few days to play out, to weeks. It's not a day trade. Here on the trade desk on Thursday, we liquidated like 5-year lows. All right, we broke out above this point in 2020, and then you came in and set that in 2022. We're in, so it's not 5-year lows, it's 3-year lows, but still. Right? We just liquidated that. There's not much left down there as far as liquidations go. If you look at this chart, it looks really bad. Like this year especially, it's had a really rough year. Right here's your January candle. So you made a lower yearly high and then dumped. And you haven't been able to get anything going. So it is extremely weak and disgusting, and it looks like this is a fresh quarter breakdown right now. You're trading under quarter support. You're trading under last quarter's low. It doesn't look good. So it's not the best trade I've ever seen. But as far as that goes, we did liquidate that low and we did bounce. So right now it's in price discovery to see if there's any more supply here. If there isn't, then obviously it will bounce. And if we look at the analyst rating, the technical rating is obviously a freaking sell. But if you look at the analyst rating, 22 analysts say it's a strong buy. That's over half of all the analysts say it's a strong buy. 4 just say buy. 13 say it's a buy and hold. 1 analyst says it's a sell. 4 say it's a strong sell. So, I mean, clearly a lot of the analysts are bullish this stock. So you might want to see what happens here. If you start pushing fresh lows under 38.28, then maybe leave it alone. But if it fails to do that in the coming days, 2 weeks, maybe you want to pick up a few calls. Or put on a call spread. Or since it's only $38 a share here, pick up some shares. Long term, I think it'll be okay. But you never know. As far as what it has already done, it's already down over 70%, 72%. So even if we do go into a new bear market, I don't really see this thing getting killed that much more. But we have an easy trade here, a very simple level to look at and manage risk buy. All right? Very simple. We don't like it if it's making fresh lows. If it refuses to do that, we do like it. Very simple to mitigate risk on something like that. Good morning, everybody. Good morning. 21 MB upload. Cruising today, bro. Yeah, it is. Cruising good. Pants check. Of course, no pants, never. Crystal clear, says Wes. Good morning. What's up? Janet, good morning. Cycles having always the same parroted crap. Exactly. And most of those people missed it anyways. You know what I mean? Not very many people have been on it. I mean, some were, obviously. Some were on it. Some probably shorted the highs. You did have a 3-drive topping formation. Also, that's a Wyckoff distribution pattern. So if you're a pattern trader, there was a topping pattern signal. There were a lot of reasons to get a little bit concerned. The macro, though, as far as, rate cuts and all that, that doesn't really support a bear market. But unless the Fed is cutting rates because they know a recession's coming, well, then that changes things, right? So, I mean, the macro is just, it's hit and miss. This is why I love technical signals. They're just better. They tell you when to chill. They tell you when to put the gas to the floor. That's what I love about them. You should probably slow your roll a bit here, or you should hammer max fuel on the pedal on the floor, sorry. But yeah, that's what it is. Dollar pushing back into that original day low, 99.87. S&P rolling over here. So S&P broke above the quarter open yesterday. That was a level that I was interested in shorting if it held. It didn't hold. I ate a stop here. But then it just formed up here on Monday's high. Here is November's VWAP. We're losing that now. Notice how there's no bullish momentum above that VWAP. That's a short signal for me. So as long as we're not making fresh day highs and pushing up into here, I think it's okay to go ahead and put on some short puts, or not short puts, long puts. Do not sell calls. Do not sell puts, not with an elevated VIX like this, because you'll get ran over. I think VIX is up at 20, so you're going to pay a lot more money for the premium, but it's still kind of, the S&P is still kind of high, being only down like 5% here. Let's see. That's your all-time high. No, that is not. Sorry. This is. No? Yeah. Okay, so you're not even down 5% anymore. You're just down 3%. A little under 3%. So, I mean, if you are looking for shorts, still early on this. Still real early. You're seeing that happen right now. I don't know why the S&P is trading with the dollar, but the dollar's weak and now the S&P's weak. It's so crazy. Bitcoin rolling over here. I hope this area holds a support for all the longs. It's hard for me to buy Bitcoin down here. I haven't seen that capitulation style move yet, and until I get that capitulation, I'm not looking for the bounce. I don't think this is not a capitulation bounce. And knowing that the year low still has not been violated, kind of worrisome. Also, I hate selling or opening fresh shorts on an extreme fear. 14 on the stock market. I hate doing that too. It's crazy. But the risk markets are just down 3%. That's the difference here. If the risk markets were down 10% or 20% and this was the reading, then I would definitely not be shorting it. But since they're only down 3%, I think you're okay. As far as liquidations go, you've been trading sideways for 3 days now, so you have built this liquidity back up. Yeah, you've built it right back up, so it could roll over before it goes back up again. There's not much, though, if you look at the liquidation heat map. There's not a whole lot left down there. But it doesn't matter if there's fearful selling taking place. It doesn't matter how much liquidity's down here. Price will break down. But it could be closer to a bounce than you were before, obviously. It's just hard to get bullish when the markets look like this. It just is. Yeah, Farcoin's starting to get a little bit of, at least a little bit lower here. At least we're making fresh 30-minute lows. That's a good thing. Way above the weekly VWAP. That's last week's, I think. Nope, that's this week's. Yeah, way above that. Way above your weekly open. You're just like literally way up there. You took out last week's high. That's crazy to me. But this is the kind of bounce I want to see Bitcoin do. Because then we can buy Bitcoin to scalp the upside momentum. Not to buy, hold for long term. I like MicroStrategy for that because MicroStrategy's already hit oversold on the weekly. It hit oversold on the weekly a couple weeks ago, right here. So I think you're probably going to see a bounce on this pretty soon, but it could drop. It could drop. It could keep dropping. But my risk is mitigated. I'm more than okay with the longs that I did put on here. I will more than likely double that position if we get down into the 90s on MicroStrategy. $90 or $100 a share. I will double what I own. And I will continue to do that if it continues to push lower because I don't own a lot of shares. I didn't go heavy on the risk. But yeah, we're starting to see momentum here on this. Yeah, I'm going to continue to hold $6,100 strike puts until we're closing dailies back above this on the cash market. We didn't even get close to doing that. So yeah, that position's still open, still going to hold it. Still holding puts on Bitcoin, not closing them. I bought puts for way out into 2027 on Bitcoin. So in theory, I can hold them all next year. I just wanted to make sure I had protection against any massive downside break. And I am going to add to this short though, on futures. Like when Bitcoin ultimately does bounce going into next year. So we still have 4 weeks. After this week closes, we'll have 4 weeks in December. 1, 2, let me see. Right here will be December. So we're going to go into 2026. You're going to get a year open for 2026 in this area, right? Anywhere in this area, you're going to have a fresh year open. And it's anybody's guess as where that's going to be. But that will be the key level to watch going into next year for short side ads. And also, of course, I will be adding to bounces as high as the 21 exponential. If we close a weekly above the 21 exponential again, this is the 50, the 21 is much higher. 21 is actually up there around the original short side entry. If we close a weekly like above that, I would probably be more than willing to sell it there. So as high as 110, I'll be looking to add to my short. Shorts, plural, multiple, because I want to build up a massive Bitcoin position, and I'm going to use the bearishness to do so. That's how I made all my Bitcoin last time. Through here and through here. I went from being a very small Bitcoin player to being a big Bitcoin player. And all because I was holding shorts in the perpetual future swap contract. It was a beautiful thing. Now I'm not trading a perp swap, but whatever tether I make, I will just convert that to Bitcoin when we get closer and closer to the bottom of the bottom. The lows. And you'll know when you're close to the lows when the weekly candles get so freaking tiny they're barely moving. Right? After you have an extended period of risk, those weeklies are going to be so tight and so small. That's when I'm going to start adding to the Bitcoin. All of that money goes right back into Bitcoin in preparation for the next big peak or whatever. Unless they have a massive breakthrough on quantum computing in between here and there. That will probably change everything. So yeah. They need to be working on that fix as far as I'm concerned. Good morning. Hard to short. Good morning. Hard to short hedge on these offshore exchanges big enough to hedge to cold storage. You don't do that. Okay, you can buy puts. So like, basically the way we did it, we did math. We did math to the extent to where like it would only cost $2,000 and put premium to completely hedge out a $50,000 position on cold storage. Because if you drop 50%, the short position goes into parity with what you own. So there will be a period where you do suffer some drawdown, but the drawdown will be minimal. And then once you reach that 50% off on Bitcoin, the put goes into parity, and then any further drawdowns that happen beyond that point, obviously you're going to have a bigger short position than the Bitcoin that you own. So you don't have to do it futures, but you can. 20x leverage is very easy to do math on. So I don't know how much Bitcoin you own. Obviously, you don't want to sell futures here, right? You don't want to sell futures after a 30% dump. You want to wait for some of those gains to come back. Then you start positioning for that short. You can do math to figure out if Bitcoin drops 30% from here, that's when my position will go into parity. Yeah, you can. It isn't hard. It is very easy. A couple $1,000. So if you own $1 million worth of Bitcoin, then you're going to want to hold like 20x leverage on a $75,000 position after you get the bounce. So you just have to do the math. It's just simple addition and subtraction. If you're using leverage, there's some multiplication and division involved, but it's all simple math, right? There's no algebra or trig. You could literally just ask Grok, how much do I need to hold at what leverage to cover or go into parity off a 30% drop? And he'll tell you. I mean, technology is a beautiful thing. Not that hard. Not that hard at all. But you definitely gotta cover. You gotta protect your portfolio. Because nobody knows how bad this drop's going to be. And to be honest with you, I would rather do it with a perpetual. Obviously, offshore exchanges could go down, right? If Bitcoin dumps and drops 90% from where it is or off the highs, obviously there are going to be some exchanges that disappear overnight. I get that. I get what you're saying, right? It is dangerous. That's why I would do like a major broker. You don't want to split it all into one thing. Like, I'm not going to try to manage. I'm not covering my hedges are many, right? I don't just have one hedge to cover my Bitcoin losses. I have many. I have the puts. I have other things working. When we get a huge bounce, I will go in deep on the futures. There are many ways. And in all of those hedges, you'll be safe. One or two of them might go down, but the others will be fine. I'm almost sure Tasty Trade is not going down if Bitcoin does. They were around a long time before Bitcoin. They'll be around a long time after Bitcoin, most likely. I mean, we're not. Obviously, it could get really bad out there, but if you're worried about everything collapsing, the whole financial system, well, then you want to hold gold and not paper. You want to hold physical gold. Even then, I don't know who's going to be buying your gold if there's no financial system anymore. You won't be trading gold for goods. You will be trading green beans and bread and flour and sugar and salt. And those are the things that will be used as currency, not cash and gold and jewelry. That stuff will be useless. I'm not expecting that to happen, of course, but Yeah, it's pretty simple to hedge. Pretty simple. Bitcoin having a little bit of a nasty move here. Are we seeing that take place on Fartcoin and XMR? Yes, we are. Nice little drop. XMR starting to push. I'd like to see it lose that VWAP. That would be great. I don't know what this line is. Don't know. Yesterday's low? I mean, Sunday's low? Is that what it is? What it looks like. It don't matter to me. This is my target right here. Last week's low is my target on XMR. I don't know that'll happen, but that's definitely my target. If I'm a short seller, there's really nothing else to short in the crypto market. Well, Fartcoin today, but before Fartcoin, there wasn't really much to short. Everything's already been killed. Bonk got devastated. Pingu got devastated. A lot of assets devastated. Your big assets, Litecoin still hasn't been devastated. All right, it's in a multi-month, multi-quarter range here. Very long time it's been trading in this garbage. Some would look at this as accumulation. I guess it's fair. You could look at it as accumulation. If that's going to be the top of the range, the bottom of the range is here or around that area. If you break down below that, I'd say Litecoin's probably going to get hammered as well. Looking at this chart, Litecoin just never really got anything going. After the 2022 bear market, Litecoin never recovered. I wonder why. Like it didn't even get close to making fresh highs. Whereas Bitcoin, Ethereum did. Ethereum made fresh all-time highs. Tom Lee, I don't know. I read a post today that said Tom Lee publicly said that he'll go back to North Korea if $7,000 Ethereum doesn't happen by end of year. I don't know if that's true. I will never find that tweet. I don't know if that's true. I didn't fact check it, but we could have Grok fact check it. Let me see. Let's have Grok fact check. Let's see. Okay, so that guy lied. This appears to be a fabricated meme or joke circulating on X. Not a real statement from him. Thank goodness. Because that guy's a professional. I would have been really upset if he would have said that. I mean, you can't let your ego get to you that bad. That's almost... I mean, it's not like crypto can't do that, guys. We've seen assets move multiple hundreds of percent in the span of one day, right? To get back up to $7,000 from here, that would be like almost a 200% rally on Ethereum. You've literally only got 4.5 weeks for that to take place. Could it? I guess. But I would assume that's the sentiment would have to drastically change. I think there's too much money in Ethereum for that to happen. It's not a low float, low cap asset. It's a big float, big cap asset. It takes a lot more to move it. You would have to spike the market cap by who knows how much. We could do the math, but it doesn't seem possible. I think $7,000 ETH is off the table for 2025. Maybe in 2026, but 25, it's probably not happening. Ooh. Yeah, I mean, that's downside continuation. You lost the 50 there as well. With a downside break. I'd be willing to short Ethereum all the way back up to 39.28, 39.30, 39.70, sorry. Any retest into this area, I don't know that you're going to get back up there, and I don't know how long it's going to take, but any pullback into this area, I would absolutely be looking for shorts. 7K, man, that's way up here. You can always fact check what you read. 150%. People will say and do anything. Good stuff. XMR. Come on, you can do it. Got an outside bearish reversal here. That's nice. They tried to buy it right there, didn't they? Not this time. Not this time, boys. How's Fartcoin looking? Oh man, it's probably almost retraced that entire 4-hour candle. Oh, it has. It could bounce here. No, I wouldn't be opening fresh shorts down here. It could bounce here. How does the, let's see what this looks like. I never did check the volume. So there was a lot of bullish volume yesterday, not so much today. It did get back to positive, but it wasn't like a lot of bullish volume. But it could find support here. I love this, but that could act as fuel to the fire to the upside. Probably won't. Dollar just made fresh lows, so now I'm kind of wondering if the dollar even is going to find support today. I think on the dollar, I would be like watching the midpoint of last week, which is where we're getting close to. Right now, kind of testing that area. Looks really bad. It looks like it's a rejection of resistance. I mean, it is a rejection of resistance, but as long as you're closing dailies above the 21, it's a hard sell for me to get super bearish. Oh, positions to hold long. Sorry, wrong. Positions to hold long in a downturn of liquidity would be like copper. I like copper down here. If you look at copper, I mean, I got a futures account, so I can trade copper futures, but there's probably copper stocks that you can get involved with. Down here's your monthly low. You've already pulled back and you're already bouncing. But if we are going to go into a large period of risk, there's going to be more pullbacks. You're not going to miss it, hopefully. Hopefully it doesn't just start rallying and go. But anywhere down into this area, I would absolutely be willing to take a position if that area acts as support. Right. Obviously, this looks very nasty. I don't know what that was, what went on there, but it's just what I would do, right? It's consolidating in a monthly range. You're trading inside last month's range. Last month was a breakout. That might have been the opportunity. We won't know until time goes on, but yeah. I don't know about energy, or at least oil. Oil is very volatile and cyclical, and OPEC can pretty much control what happens to oil. But if you look at oil on a long-term chart, it has been pulling back for a long time. So if we are going to go into a longer term period of a risk off market, then we kind of want to be maybe looking to potentially buy some oil or XLE. XLE is the energy fund ETF. There's a quarterly support. Looks like you got a retest of that last month. Yeah. 84, 81. If it could get down into here and hold, you got a split coming up on this. 2-1, not that bad. Yeah, if it could get back down into this area and hold, I would be a buyer on XLE potentially for like a long-term hold all next year. And then, of course, something that I'm going to be watching for a while is this. And what we're going to be keeping our eyes on is going to be last month's high. We were also going to watch last week's high, but anyway, if it can fail to get upside continuation from there, this is where I want to hold Aussie yen shorts. Looks like it's running out of bullish momentum, right? Bounced off the 21 here, nice bounce, but it was an insignificant high. Pulled back into it again, put in another bear trap and bounced yet again, another insignificant high. It's literally a 3-drive topping formation on the daily chart. Kind of got a 3-drive topping formation on the weekly chart as well. So it does look like it's running out of momentum. So I don't want to be a seller on Aussie yen if it breaches this high and puts in a bullish extension. So basically, I'm already looking for the short on Aussie yen. This asset in a risk-off scenario can get absolutely hammered. 2020, that was a risk-off scenario. And then 2024, we had another risk-off scare. And in early 2025, we had a risk-off scare. Right? So this thing is primed and ripe and ready to starting to look for those bearish positions. And this is something you can hold long term. You can hold this thing short as long as you want. Why is hungry out there? Right here. So obviously holding short positions, you're going to have to pay to carry. So you'll have to pay daily. It's not a great trade as far as the funding rate, but If it does become a risk off scenario, this is going to dump probably hard and fast. And then in that scenario, it wouldn't matter to pay a little premium off the profits if that occurs. Good morning, Joy of Bears. Can you please check XRP? It has constant positive inflows on the new ETFs, and 4-hour chart looks very interesting. XRP. Let's pull it up. It did have a nice bounce the last couple days, but so did Fartcoin. You're still trading inside last week's range. I would be a seller on this. Your 21 is all the way up there on the weekly. Yeah, you lost your 50. I could be a seller all the way back up to here, but I think I would be a seller here, not a buyer. That's my opinion and my analysis. Yeah, absolutely. You're trading right under a very significant level to hold. So you're range bound as long as you're above that. You're still in this candle's range, right? But under it, you're not. Under it, you have a fresh multi-month break down. It probably got extended to the downside, meaning it was just like one-sided trade, right? It's too much short side. So this big, gigantic, bullish pop, if we could get up to here and then fall back down, I would absolutely take that sell. I wouldn't short it today. The trade would have already happened. It actually would have been a difficult trade to take, but once you lost this, you could have been watching a 4-hour supply candle for the short, which would have been there. So in theory, one could have arguably entered a fresh short here this morning. So I might not get that week high liquidation. If it does find support here at this key monthly swing, then I would wait for this to sell it if it starts to trade back up. But I would definitely be taking profits or looking for fresh shorts. In bearish markets, these big bullish pops usually get sold, guys. They don't have continuation. Every now and then you'll get continuation, but most of the time it's going to be faded. It doesn't look like a key swing, but it is. It's literally last quarter's low. It is a crucial swing. So you're trading there right now. That could act as near-term support today, but I wouldn't be wanting to buy that. I think I would reserve the right to sell it once it got up to here. But as long as you're closing weeklies under the 21, and even the first close back above, I would still be more bearishly biased until we got that upside continuation. The problem with a choppy environment is moving averages can chop you to pieces if that's the only thing you're looking at. Weekly ranges do pretty good. Yeah, I mean, you've done nothing. It's a nice bounce on the daily chart. It looks aggressive, and this is what I would want to see on Bitcoin. Like, I would love to catch that bounce, because if you bought daily support, for instance, and took profits at daily res, which is right here, just under, that's a 13% rally. Now, that's a phenomenal trade. So just looking for like an intra-week trade or a day trade, yeah, you can buy potential support. It's going to be here. It needs to hold here if it's going to have any upside continuation. If you lose this, the breakdown is continuing. The trend. Right now, the trend is down, right? You set your all-time high, and this through here wasn't really a trend. It was a lot of price discovery, but this was the breakdown. Boom. You got a lower high bounce. They sold it, and you've been seeing lower highs and lower closes. It's bearish. You're now trending. So any pop in price will likely be sold into or faded. I think those are going to be the better setups as long as you have this structure. Let's see where the death cross occurred, or even, yeah, it occurred right there. Yeah, that would have been a beautiful short setup. So in this scenario, you did get the death cross and you did bounce right up to the 200, which would have been a selling opportunity because the signal was bearish. That's a selling opportunity, not a buying opportunity, unless you're scalping. Scalpers can be long and short every day, right? But the longer trade, like the position trade, is still, in my opinion, a sell. Wait, full-on bear market. What I mean by that, Matthew, is we're under 30%. We're off 30%. That's it. You're not in a bear market on ES. You're not in a bear market on NQ. You're not in a bear market on IWM or the Dow. Bitcoin is the only thing that is off more than 20% from the highs. That is what is considered full-on bear market. For Bitcoin, I go 10% lower. I like 30%. To me, if Bitcoin's off 30%, you can say it's in a bear market. Now, with that being said, years ago, Bitcoin would have 30, 40% corrections in a bull market. So getting super bearish on Bitcoin on a 30% dip years ago would not have been a good play. But nowadays, it's much different. It's got a lot more institutional order flow now than it used to have. So it doesn't need to be a bear market. You're in a rate cutting environment. You're not in a recession yet. The recession signals have all fired, but the recessionary indicators that the NBER focus on to classify recession have not happened yet. So you're not in a full-on bear market, just on Bitcoin, and only based on that one criteria. It's 30% off the highs. That is all. That's all I mean by saying that. Well, I don't even need to ask because we haven't had 2 negative quarters of GDP, and that's one aspect of a recession. You need 2 quarters of negative GDP, and then you got 6 other indicators that have to flash. All 6 of them have to flash before NBER will say we're in a recession. We're a long ways from that. So, I mean, you can be buying the dip here, right? I'm only telling you what I see taking place on a technical basis. The Fed is cutting interest rates. This could ultimately end up being just a dip. You could see fresh all-time highs in 2026. But I'm not going to say that can happen or that it is going to happen. Obviously it can. We trade signals that price give us. Right now you're bearish on the year. You're bearish on the month. You have a fresh monthly breakdown out of a 4-month range. You set all-time highs and are now closer to making fresh yearly lows. I can go on and on. You're down 30%. You're under the weekly 21. You're under the weekly 50. You're under the 50 on the RSI on the week. I mean, there's all the signals are bearish. All of them. All of them, unfortunately. You have a 3-drop topping formation here. I can go on. I am expecting a bounce, but I will be selling into that bounce unless market conditions change. And by market conditions, I mean, does the Fed stop taking liquidity out of the market? Do they start putting liquidity into the market? Because if the Fed starts to do quantitative easing again, they're doing quantitative tightening. So if they go back to easing and rate cuts, markets are probably going to bounce. That's going to change the dynamic of global liquidity. But until that changes, the signal is look for the short, or at least protect your position, your long position. I'm not saying that we're in bear market or in a recession. We're traders here. We're more trader like focused than long term. I mean, we do buy long term. We do the long term growth thing, but our day job is a trader, a day trader. We make money on a daily basis. We look for daily opportunities. And then when we grow our account throughout the year, that is account growth. We just do it this way instead of buy and hold strategies. But if we can do this, like the best of them, we can definitely do buy and hold strategies like the best of them. That is easy. That's the best way to trade. Buy, hold for long-term growth. Buy dips. So that's why I will and always continue to say, when you get a weekly oversold reading on any good long-term growth asset, you should be buying, not with leverage. Just put it in your portfolio and then continue to add on weakness. Continue to add on weakness. MicroStrategy here is super bearish, dude. MicroStrategy is so far beyond bear market, it's not even funny. It's given back over 2/3, not just half, 2/3 of its value. That is bear, not bull. A bull market pullback would be a retest of the weekly 50. That's a bull market pullback. That's a buying op, right? In the bull market or in bullish market conditions, you rarely see that 50 get violated. Rarely see that happen. Right? This is all bearish. All this. Once you did this, then your market conditions changed. You went from bearish to bullish. And then you added on 50 tests, right? Well, now that condition has changed once again. It went from buy the 50 to sell the 50. That's all I'm saying. That's what I mean by that. Try to keep you guys on the right side of the markets. You can have a bias, an overall bias. It's fine. If you still have a bullish bias, that's 100% okay. You might be looking at indicators that I'm not looking at, and maybe your indicators are saying, dude, this is nothing. But my indicators are saying, dude, position for weakness, or at least protect your growth capital. Good morning, Tom. How you doing, my friend? Q3 would mean Powell is out. Yeah, May is what I heard. May is when Powell's gone. So Q2 of 2026, Powell will be gone. Obviously, Trump can change his mind. Trump has changed his mind before. He could change it again. Alex says, when market structure shifts into the opposite direction, how many consecutive fresh highs or lows do you look for before confirming? Well, first, there's no such thing as a confirmation because traps exist. Traps basically take away any confirmation. So, like, for me, I start getting defensively positioned, or at least start looking for shorts when you start closing days under the 21. When you start closing consecutive days under and pushing on lows. You know what I mean? Like, if it's going to be a trap, you're going to get like one close, maybe two, and then the next day you're going to gap up or something like that, right? And then that's going to be time to like look for the buy because it is a potential trap. But there is no such thing as a confirmation. MicroStrategy could reverse here and go right back to all-time highs in a span of like 6 weeks. You know what I mean? There's no such thing as a confirmation. But yeah, if you start closing and pushing on lows, that's when it's pretty confirmed. Especially when you lose that weekly 50. That is like such an old-time bull market indicator. It's like everybody knows to watch the weekly 50. I mean, it literally bounced here, right? You can just look back in hindsight and see all the times and places that it bounced. Now, why that bounce was happening, it probably took a couple days before it ultimately reversed. But still, once you start closing those weeks under and pushing, that's when you got something different. So like in this week, we would have been extremely wary. We would have been watching what happens at the next week, like at that high. Like, we probably would have been looking for this short, but only if it rejected there. So if we go back into the daily and look at it, you're going to see how it like kind of did a fake out, right? So like, this is that weekly high we would have been looking to sell, because at this point, at this close, we're under the 50 on the weekly. So as this started to push back up, right, on the daily time frame, I would have been telling my community, hey, we did get a bearish signal. We could be setting a bull trap here. So what we're going to do is we're going to watch the previous week's high and how the daily responds to that daily 21. That would have been our short setup. What would have told us to no longer look for the shorts is if we would have seen like another day gap up and make fresh highs, and then another day gap up, make fresh highs. Then we would know, or at least assume, moving forward, we would be looking to be buying the dip, right? But we would have been able to position for this short absolutely perfectly and easily, based on what data the weekly chart was giving us. So this was a very easy short. Watch for that rejection. If you get it, you want to hold shorts, right? That's what I look for. Stuff like that. But this close would have had us back to, well, we don't know what's going on. So that would have been the major point of risk, that line. As long as you're trading above that, you are threatening a breakout, but the trend, until the trend changes, is still down. Does that make sense? It just sometimes takes a day or two to play out. Because traps exist. They are constantly trying to get people on the wrong side of the market. They're trying to get people to jump in early, and then they go off and smoke that liquidity, set the trap, and then run it back all the time. But then once you put in this bullish or bearish engulfing candle, that would have been full on, all right, now it's time to sell every bounce. Every bounce. Every bounce. Sell, sell, sell. Until you reverse that trend, which happened here. Right? Very simple. Even though this closed back under, would have been a very simple place to watch for longs. Very easy. If we start pushing below this price and continuing, it's probably going back lower. But if it bounces here, this is where we want to be a buyer. On the daily time frame, that took time. This one was a lot more difficult because that took weeks to play out. It took 2 weeks to play out. So we probably would have ate a stop or two, right? So that would have been that point at which there's the risk. So below this point, its risk is off. As long as you're above it, you can still have a risk on bias based on the week signal, the weekly chart signal. So this is where we would have been looking to be a buyer and stay looking to be a buyer until you're closing and pushing, closing, pushing, closing, pushing. Because then it's, nope, it's done. But we have to also be aware when the chop starts to happen. See, on the daily, you're seeing a lot of chop. You're getting chopped to pieces in here, looking for longs and shorts, longs and shorts. This probably would have got us a couple times, to be honest. We probably would have ate a couple stops because of how much time it took. But you're not closing weeklies under, you closed the weekly under the 50, but that 21 was caressing price, if you will. It was kind of like propping it. We would have been kind of still having a bearish bias here, but getting to like flipping, getting ready to start flipping that bias. As long as you're in the Discord, you will be fine. You should be fine. You shouldn't, I mean, unless it just starts chopping on the weekly, then it's just impossible. But that very rarely happens. It happened through here. There was 5 or 6 weeks of chop through there, but still, you're still protecting that price. Price is key for me. Objective price levels, they are absolute key because they are objective. It is what the market is doing. It's not going to tell you what the market will do. It's telling you what the market is doing currently. So like this fart coin short, I have no idea what it's going to do. But as long as it's trading under last week's high, I know what it is doing. It is trading under last week's high. So until that no longer ceases to be the case, I do want to hold a short. But I still could be wrong on bias and direction. Because this is still extremely extended to the downside. Like, you haven't even retested the 21 yet. There's not even 50 weekly candles here. Just shy of the 50. So I don't even know where the 50 would be, but obviously this is bearish. So Fartcoin could go all the way back up to here. It's not going to this week. It will take a long time. Because as it trades sideways, this average is going to be dropping and dropping. So eventually, out in here somewhere, it'll be retesting again. So right now, taking the short, we're shorting a very extended market. This is not like the best signal, but at least objectively speaking, as long as the market is trading under last week's high, we probably want to be holding a short based on current market conditions. That could 100% change in the future. That's why we protect our entries with stop losses. You know what I mean? We're going to get trades wrong, for sure. Absolutely, it's going to happen. That's a factual statement. But as long as we're good at mitigating our risk, our setups are good, and eventually we will nail really good winners. And with time and the data that I have, trading this way is profitable. We're just going to have to, take some small losses, and it is what it is. But there wasn't like a perfect setup here. There isn't a perfect setup in crypto right now. Not any of the assets that I've been looking at. Everything is a little bit extended or range bound, or you know what I mean? It's just not there. Yeah, I mean, the perfect short on Litecoin would have been when we shorted it, when we started talking about shorting it. Remember when we were shorting it here? This is a Tuesday candle. We did a public live stream on that day. Literally said this is a beautiful short setup. As long as you're trading under yesterday's low, right? That's what I said on that day. As long as you're trading under yesterday's low, this is a short setup. See where that is? See where that is? You're under the 50 here. So basically, I can't get the weekly candle to show us exactly where we were on that day. Well, maybe I can. No. I would have to stop it. Here, let's try. Let's see if we can get the weekly to the exact point of where it was that day. All right, now we have to play it. Okay. So that's Monday. We want Tuesday. So one more click. Boom. Okay. Now, this is an A+ setup. Right? If this was going to continue because of this bullish rally, let's get rid of everything but only what we need here. We only need these two lines. We don't need anything else. So if you were going to see upside continuation because of this rally, we would have expected this price to hold. So on this week, as it was pushing down and down and down, we would have expected for price to form support right there. It did not happen. You pushed under it and closed lower. So coming into this week, based on the signal that we have, we're trading under the 21. Yes. Are we trading under the 50? Yes. There's Monday's high. So as long as price is trading under this price, objectively speaking, the market is going lower, or it has been and might continue to go lower. That's why that was a beautiful setup and the perfect short. Very easy, very simple. Because if you're trading above this point, you're doing something different. You're actually above the 50 again. And that could have near-term bullish ramifications. But as long as you're under that, short, it's a short. And that's exactly what was said on Tuesday. I didn't take the trade myself because I was already in multiple positions. But as far as setups go, that one was beautiful. And then this is how the market played out after that. Like, there's no reason to close that short. None. All right. And here we are. Still no reason to close that position. Stop should be setting at break even. You should have already taken profits if you took that trade and move your stop to break even. Unless you're holding for a longer term, deeper drop. Then in that scenario, it is what it is. But yeah, there's really no confirmation, but with objective price points, market conditions, we can get positioned pretty good most of the time. So now on Ethereum or on Litecoin moving forward, as long as weeklies are consistently and continuing to close under 97.86, you have a bearish bias. And it could pull back all the way to this price, and we would still have a bearish bias. I wouldn't short it where it is right now because it's contending and competing with support. But I would short it if it got back up to here or here. Absolutely. Would I make money on the trade? Don't know. But I would absolutely take that trade every single time. 100%. That we don't have that on Fartcoin right now. We don't have anything that's perfect. We could look. See, like this asset is still uber bullish. Like you're still closing dailies above the 21 and weeklies above the 21. That's what this bounce came from, off a weekly 21 bounce. See that? So us having a bearish bias here is super early. This would be more of a bullish reaction, so we should typically be looking to buy if the market conditions supported the bullish narrative. So technically speaking, this is a terrible trade. Absolute garbage. It's struggling to break down here because of what it's testing here intraday. You're literally testing the daily 21 and the weekly VWAP. So if it fails to close under here today, then my short is probably wrong. If we push and close under this price, then I have no reason to close that short. On this low, it was almost to the point to where I could take profits. It's because I got stopped out of that wick. Earlier, my position was up there. So if I wouldn't have got stopped out, I would have been able to take profits on that expansion lower into support. I would have been able to get out of the majority of the trade and set my stop to break even and hope for the best. But if I get stopped out, I've been good. I don't want to miss it if it rolls over, so I chased it today. I woke up and realized I ate a stop over in the middle of the night when I was in bed, and I got overly emotional and chased it because I think it's going to drop. I don't know that it is, but I think it is. The ZEC did drop, and Litecoin is dropping, and Dash has pretty much dropped. So XRP, once again, it's not perfect, but it is perfect up here, right? So we missed the short, so I'm not chasing it. We could have shorted it there, but I would have rather had that objective test. But I'm definitely going to watch this price moving forward because that is a perfect setup. So if it comes back up here, I will be shorting it. Okay? So keep XRP on watch. But here's Dash. Dash, extremely bullish, but it has started to lose that bullish momentum right there. But on the weekly, it's still super bullish. Still way above. So not a good signal, not a good setup. But early, we could look to short it on pullbacks up into here. Not really an objective level to watch up there, but yeah, there's nothing really, like nothing major. There's we could watch last month's swing high. That's an objective level, that's a major level. And the 21 is right there. So we could do like an if-then statement on Dash as well. If it refuses to trade higher than 71.90, we can short it. Set stops though, because if it breaks out above that price, then we're probably wrong on the short. That's all I do from day to day. I look for those good setups. And occasionally we take bad setups when there is no good setup to take. Those don't work out as often. Those don't work out that great. IWM is strong, says Sam. Is it? I haven't looked at it in a while. I know Amazon was bouncing off the year open. It looks like that's what's going on. Let's go look at Amazon. Yeah. You bounced. Oh, sorry, wrong chart. Here, let me do this. Bear with me. So, you were bouncing off the yearly open. You put in this bear trap here and then bounced back above it. So, I don't love Amazon here because it's an early short, but on the weekly, it is still super bullish. Right? You're still rejecting to drop under the 50. So as long as you're holding that, you could be looking to buy it. You could even do something like this. That is a demand level. So because the year open is right here and it's a yearly level, so it's not going to be an easy level to watch intraday. The longer term levels obviously take longer time to situate, but we could potentially be a buyer on Amazon as long as we're not closing dailies under 217. But I don't love it, right? It's not perfect. It's not beautiful. It was a nice bounce off of support. So this is probably why the IWM is looking good. This is what Nvidia did also. That is a good looking move right there. Yeah, I mean, this is a good look. It still could be early. That high is 46.38. That high is 46.26. So this high is higher. 38. So if you fail at 46.38, you could short it. It's bullish. It isn't structured for a short. It is not a bearish signal. So that trade might not work, right? It's not a perfect setup, but it is an objective level to watch, and it's an easy trade to manage risk from. But objectively speaking, this has a more bullish look than a bearish look. That means the S&P ultimately did not reject, and it is trying to get upside continuation from the November VWAP. So this will be an important day or the ES futures. Very important day here. If it fails to make upside break and continuation into this stuff here, it's still a sell. Above that, and then you got this changing. I still won't want to buy it at the top edge of the expected move, but still, it might not be a short anymore, right? But as long as you're rejecting here, I think you still should be holding shorts based on the elevated VIX. But the VIX is dropping, and that's what the VIX does. So a lot of people that have been extremely bearish, they could still be really early. The S&P could make fresh all-time highs by the end of the year. We're still in that it is possible zone. Looking at what Bitcoin did and is what it is doing, doesn't seem like it will, but it could. I think you should still be at least putting on some kind of defensive position just in case, or at least mitigating a black swan event, because a black swan event could happen. I read that. Afternoon from the UK. This is how interview you were referring to today and yesterday. Was it the bankless one? One of them was, yeah. Yeah, he did do a bankless interview. Yep. Dollar gained strength as the market gained strength during .com. Yeah, the dollar, the correlation coefficient right now on the S&P and stuff like that is crazy. See, we can look at that. We can put the correlation coefficient on the dollar. What just happened here? Oh, sorry. That's it right there. I think. Yeah. Okay, perfect. So here's your dollar coefficient. The way this works is down here, it is negatively inverse. Here, there's no correlation. And then up here, it's positively correlated. So right now, according to this indicator on the daily time frame, you're more negatively correlated to the dollar than you are positively correlated. So that typically means it's going to do the opposite, but it changes. It's not a constant. So it's getting more difficult. Used to, it would be a lot more like here for a while. It was positively correlated. This is not the SPX. What is that? Here we go. That's better. Even then, still very positively correlated through here. Inversely correlated through here. It changes. It's not like a constant. Weekly is more positively correlated. So that would infer right now, dollar gets sold, S&P gets sold, because they're more positively correlated on the larger time frames. If I was going to look at the coefficient, I would probably do that on the longer time frames, but it's just an indicator. It still is what it is. Like the S&P looks good here, but it's still a sell. You're still just an inside week. It needs to break. It needs to break out and push up. Otherwise, it's a short. Every time it fails to break out, that's just another short opportunity. So even though it's chopping like crazy here, it's still a short opportunity here. Up in here, not so much, right? But right where it is right now, it's a short setup. Just mitigate your risk. Take the short and know when you want to get out. I have 6100 strike puts on, so I have way out of the money puts, right? So I'm not really losing a whole lot of money on those. Well, A, because I put them on way up here. As long as price is under this white line, my position is up. But in theory, I could put more on today as long as it stays under here. The breakout and bullish continuation, that's when it's a no-go. That's when you would have to close that intraday trade out. But if it's a longer term trade and your risk is mitigated, like putting on a long-term spread, for instance, you could go out, pull up the SPY. Let's do this. Let's pull up the SPY and go way out. So we think the market's going to be bearish going into next year. So we definitely want to move our expiration out beyond a specific time next year, maybe Q3, Q2. All right, we'll go Q2. So we could say we think it's going to drop down here, right? So we could buy the 610 call, and then we could eliminate a lot of this risk. Like if you don't have the margin to put this trade on, or if you can't afford to lose $1,600, then you can mitigate that position by putting on a spread. You can simply sell a lower strike. Now that's going to cap the amount of money that you can make on this trade. But you can see how you can put on a trade that only costs $238 and will make, well, max. The only way you make max profit on a downside move is if the S&P goes to zero. So just get that out of your head. I would cut that way down, like in half at least. So you could still put on a decent out of the money trade long term. And this spread right here is going to cost you $200 to put it on, $238. You're going to be able to sell it in theory. Let's see, 1613. So it's a 5, 10, 15 point wide spread. So if we put that on the same way, 15 points wide, 85. So in theory, you would be able to sell that once both strikes are in the money for $583. So it's a 2-to-1 risk to reward, right? That's what you could expect on a long-term trade like that. If you do have the money and you have a lot of equities in your portfolio that you plan on holding through this drawdown, then you should probably just buy the put outright, because it's going to pay a lot more. So you put on the same position, you're paying $16 for it. You can start to get paid $30 for it. And these numbers are going to go up if the risk market falls, because the VIX is going to go up, and that's going to cause these premiums to rise. So you'll probably be able to sell it for more than $30, and that's just right at the money. If the S&P has a nasty dump, you're going to be able to sell it for a lot of money. Lots of money. And that's all I did. I went way out in time and put on a 6100 strike put. Many of them, but still at par with my risk parameters on my main portfolio. So I know what I'm going to lose if the markets go back up. It's that simple. It's a good trade. And you're still in sort of that scenario here, inside last week's range. It's still a decent short. If you don't have a lot of money, there is another way that you can trade the S&P. You can trade the futures, MES, which is the micro ES futures. On that, you can only go out 171 days, unfortunately. But you can put on a similar trade, and it'll only cost you $600 instead of $1,600. But this will expire a lot quicker. But same trade, same position, and a $6,100 dump would have you down. Well, let's go from all-time highs. So if 6,100 strike got in the money, that would literally be just an 11-point correction, or 11%. Sorry, 11% correction. That's nothing. Like, that can happen in a bear market easily. If the S&P does go back into bear market conditions, then you're looking for a 20% drawdown. And that's going to put that 6,100 strike put way in the money. If that were to happen, it's going way up in the money. Then you're looking 500 points in the money. You'd be selling that for, you bought it for 682 roughly. You would be selling it for to about $3,000. So you're paying $680 to potentially make $3,000. And this is the same. As this goes down, the premium will go up because the VIX goes up. That's not what I'm expecting to happen. I only positioned in case that happens. I expect this will probably most likely slowly grind back lower. Very slowly, going into the end of the year. And if that happens, then this is going to slowly grind back up. Slowly. But you're testing a really good area, objectively speaking, to throw on some insurance. Premiums are a little bit jacked up with a $20 VIX. Nvidia getting destroyed. Where is weekly support on Nvidia? You're testing the August open right now. But that's like in the middle of nowhere. This is support. And if you lose this, it's going to look bad. Because that's Q3's low. Oh, wait, no, it isn't. Sorry, October starts Q3. That's September. My bad. I thought it was October. That's October. Okay. Yeah, this is support. It's just your September open. And it could bounce here. I don't know that it will, but you've lost your 21 on the daily. Where's the weekly 21? You're losing it now. So the major support's down here. You haven't even tested the 50 on Nvidia since you broke back out to the upside. This has been so bullish it couldn't even pull back to the 50. That's how bullish the stock has been. So what I'm saying is this thing has a lot of room it can go lower. I would expect this level to hold for a day or two. If you cut right through it, then obviously something else is going on. But I would expect this level to hold for a little while. 170. Because it's a monthly open. But you do have a nasty looking monthly candle. You are so close to having a bearish engulfing. That's a pretty nasty signal. Why are there levels up there? Oh, before the split. It's not quite a bearish engulfing because you didn't take out the high to 12.19 to 11.34, so that you didn't take out the high, but it's a nasty looking it's a nasty looking downside trending candle. The weekly, you've been trending for 4 weeks now. Well, actually 3, because this was an inside week. That was a lower close, lower low, lower low, lower close. Boom, boom. Not great. Could act as support here. If you're just holding longs, hoping, that's not a great way to do this. If you bought it way down in here, I think you're still okay. But I would start positioning defensively if you close under the 21 this week. So Friday will be a very important day for you if you're holding profitable open positions on Nvidia. Now, with that being said, if this week does, let's pretend today's Friday and we're right at the bell. So this is going to be the close for this week. So you are closing under. That means next week, if you bounce back up to this point and fail, that's where I would want to buy puts on Nvidia to protect whatever gains I have open on that trade. But you need to buy, you don't want to spend the exact amount of money that you have in profits on the trade. You want to spend a lot less, because if that position doesn't work out, you don't want to swallow all of your Nvidia profits on a single insurance play. Wouldn't hurt to just go ahead and take some profits on the open P&L that you have, unless you don't want to pay taxes. And in that scenario, the only thing you can do is buy a put or two, or however many you need to buy, to ensure that if Nvidia does break down here badly, your position will be okay. You need to hedge out the downside risk. If you can, I think you can see 150 Nvidia. It's possible. There's a lot of negative stuff being discussed about Nvidia right now, saying that they're probably not, like, they've been overhyping their earnings, and now they put themselves in a bind to where the next 3 earnings play, or the next 3 years potentially, they will not be able to lie about their earnings. Now, that's not me saying that. That's Michael Burry and a few other macro analysts saying that. But Michael Burry has a massive short position open on Nvidia right now via puts. It's his money. He's not trading his firm's capital. It's his own personal money, if I read that correctly. And then it's just going based on what he said publicly. That is not fact checked. So obviously he could be lying. I don't know how he's positioned. But right now, publicly, he is short Nvidia via puts. Lots of them, more than likely. Huge position. He claims he has a huge position open for short Nvidia because of macro reasons. Keep that in mind. I mean, the dude's been wrong for a long time. He was wrong for a long time on the big short as well, but it ultimately did work out for him, and I'm glad it did, because he made billions of dollars. He became massively successful on one trade. The problem is he sat in a nasty loss for almost 2 years before that trade played out. So being wrong, or being early, is wrong if you don't have the margin to cover it. He had the margin to cover it, but he was getting very, very close to running out of margin. Does that make sense? Like, I would say in another 6 months to a year, if the housing market had not collapsed, you would have never heard about Michael Burry. Or if you did hear about Michael Burry, it would be in reference to being made a joke about, of how that dude blew his hedge fund betting on the housing market. But he is heavily short in video right now. Gold won't be useless. The guy who has all the beans and all the guns will have a wife who wants gold. I get it. You know what I mean, Wes. It won't be useless. It'll work good as a tool to knock people over the head with. It's something shiny to look at. So yeah. But how many cans of green beans will you get for an ounce of gold? I don't know. Maybe one. I think a lot of flows went out of Litecoin into BCH. If they did it in literally one day. I don't think. Where is the X? Why can't I get out of this? F. There we go. Okay. BCH. I don't think there's any. Do they have ETFs? Not on the ETF flow meter that I have. It's only Bitcoin, Ethereum, and Solana. But if the flows did leave, they did it in one day. Because BCH only popped one day. It's a one-day spike. I'd say it's done. It could find support here. I wouldn't put on a fresh short here, but we were looking for the short up there. We did get stopped out. I got stopped out of it yesterday. Yesterday we were watching, let's see, Monday morning. So in here. Okay, so we were probably watching like this swing high right here. I can tell you exactly when I got stopped out. I got stopped out right there. So yeah. We were watching this swing high. Or maybe, yeah. 9, 10, yes. We were short here. And then that candle took me out. And then as you can see, so I was just barely out of it. It doesn't matter though. It's still a loss. It counted as a loss, and I only tried it once. I got rid of it after. Got mad at it and deleted it. It doesn't look great here. It's bouncing off the daily 21, but if it continues to look like this, I'd say it's probably done. It's probably going to roll over. It's probably going to give it all back. That was probably news and a bunch of other garbage, but it doesn't matter, right? I rarely trade this. It's very choppy, very ugly. It's a dirty chart. There are easier things to trade, in my opinion. Even XMR has been a very difficult trading asset. Very difficult. Very choppy, very just disgusting chart. All right. Hopefully it's done now. It looks good now to be done. But if we get back up in here and above this, I'm probably wrong. Probably wrong. But I'm short. I'm going to continue to hold short as long as we're trading under the midpoint. So yeah, this could be a trap. This is the first real support break that has happened on XMR. Let me get rid of the moving averages. I keep leaving them on. I only really care about the daily moving averages, guys. I really don't care about moving averages on a small time frame or an intraday chart. But it's probably more the daily 21 that it's testing a support here instead of last week's VWAP. So we can get rid of last week's VWAP. It's because the daily 21 is right here, right? That's why it's bouncing, or at the very minimum, that's why it's struggling to break down, because that's where your people who think this is going higher are buying it. I don't think it is going higher. I think it is going lower, but it doesn't mean it is. I could be wrong. But anyway, if we go back here, you can see this is what's holding us support. You can see that support right here. So they think this is going to hold. If you get above this point, they might be right. But I would still add to my short here. Absolutely. If it got up there today, would I add to it? Probably not. Because if it got up there today, then something else is going on, and I'm clearly wrong because the buyers that bought here are right. You know what I mean? I don't think it's coming back up here. I think this was your last chance to short XMR here. And that was last night at 10 o'clock. Right? 2000 hours is 8. So 2200 hours is 10. So at 10 o'clock, you opened here, pushed up, and fell. That was probably the last chance you're going to get for the short. So more than likely, this will pull back up into here and roll over. If I'm right. And then you'll get a daily close down in here, hopefully. That's if I'm right. But I do want to continue to hold the short. I don't like that you closed back above the daily and you're already testing it again. I don't like that. I never like that. If this was legit bullish, I would have wanted to see yesterday's low hold. So if this was legit bullish, I would have known that the 21 was down there. I would have been looking to be a buyer right about where it is here. Or I could have even went deeper in the chart and find like an hourly support or something. Like in here, you see how this is resistance? This bearish candle is what I'm focusing on. I'm only looking at that one single. See this bearish candle right here? That's what I'm looking at. Because when you put this bearish candle in, every candle after that was bullish. So if I was looking to be a buyer on the daily 21, I could have in theory started to look to buy that right there. Boom. And more than likely, I would have waited for the close of that candle to put the buy order on. But I'm not a buyer. I am a seller. Risk markets testing previous month mid again. So probably going to see if the buyers are back or if the sellers are right here. Last chance to put on shorts right now. We could try a day trade. Yeah, it only costs 13 bucks. Oh, wait a minute. Let me close that stuff off. Yeah, we could. I don't want to put on a 0 day. I don't want to buy options a 0 day. I want to buy a week away, 7 days. You could put on a put right there. Something like this. 7 days out. Buy the 67.40. You'll lose 248 if you hold this to expiration and it keeps going up. If it rejects, then you'll make money. Not much. because these don't move that much, but let's see what happens. What's Bitcoin doing? Bitcoin's still doing nothing. It's trying to bounce. Bitcoin didn't really do anything yesterday until later on in the session. About noon, you had this nice break and then up. We were long Ethereum yesterday. We were looking to buy Ethereum yesterday. That was the day trade that we put on yesterday morning. Around, I don't remember what we were looking at though. Yeah, we were pretty much long from like right here. Were we looking at the 30-minute chart? Yeah. We were watching this support right here. Oh yeah, week open. Yes, there it is. That's what we were looking to buy yesterday. It ultimately did give us a nice run later on in the day. The only reason we were looking to buy it yesterday is because it was retesting the weekly open. So we didn't think that this was going to break down. We thought this was like a fake breakdown move here. And that ended up being the right trade. I didn't get filled on that ES, so now I have to chase it down a strike. And of course it fills me instantly. Funny. But anyway, let me finish answering some of these questions. ETH is not the better asset now. I don't know if it's better than anything. I like Ethereum. It's fun to trade. It does have good moves occasionally. Yesterday, Bitcoin was up like 1.5%. ETH at one point was up 5%. XRP wick on Binance is funny. Massive leverage dive. What happened to XRP? Let me go XRP USD on Binance. Yeah, we got one of those wicks on Pingu too, but the Pingu wick was an 80% loss. 72% loss on XRP. So if you look at Pingu right now, we shorted Pingu that day at weekly open. We were shorting Pingu. I actually closed that trade out down here and was too scared to buy it because it was moving that day. But it was one of the best trades. It's just the problem is it was a small position. The trade itself made over 1,000%. It was a good trade. But anyway, that liquidation occurred and it's still just been a short. That's not a good look for Pingu. Not a good look at all. That's last week. Sorry. It looks okay right now. See how this is like acting like a trap, breaking down below what is your near-term support. So if they can smoke that high, they might get up to last week's low. It's not last week's low, it's the prior week low. Yeah, That would be take profit target if you did buy weekly, if you did buy the weekly open on Pingu, regardless if you bought it on the weekly open or here, whenever, where, just if you bought the week open. This is a pretty decent take profit, but it is struggling a bit where it is. Pingu could bounce. I don't know that the Fartcoin trade is going to work. All right, the Fartcoin trade has a lot of bullish momentum here. And notice how it, remember how I said it could hold support there? It did. Do you guys remember that? It literally did. I said Fartcoin could hold support here. It literally did. So this is now the range to break. I didn't even see November's open. Holy shit. Yeah, forget about last week's high, bro. If that November open is legit, it is. Yeah, that right here. This is your range for the rest of the day. So if you have a bullish bias on Fartcoin, you would literally be looking to buy 29.54. If you have a bearish bias on Fartcoin, you're looking to sell 31.95. It's that simple. Stops under each just in case you're wrong. But this is not a great looking candle. Now, with that being said, it just opened 30 minutes ago. But I still don't love this close. If I honestly thought Fartcoin was going to roll over, I would literally wanted to see fresh 4-hour lows. So when we were pushing here, I would have wanted to see a deeper push. Then I would have had a little bit more of a bearish bias. This is not a deep enough push. Right now, the longs are trying to protect this thing. So I wouldn't be looking to buy it if it came down there with speed. I would stay out of its way. Like if it drops down there in 1 30-minute period, I would probably stay out of its way. Because you're probably going to see an expansion happen after that. But if it slowly grinds out in this area, that's going to feel more bullish than bearish. Session volume profiles probably building up here. It is. So they definitely want to sell it here, but notice how it's mostly bid volume, not sell side. Huge buying happening up here. Those could have been stop loss shorts though. All these blue bids, these are all bids. It literally could have just been short stop losses causing that buying pressure. So if it refuses to go back up here, I'm going to like the short, but I don't like that it bounced off this. I don't like that. And the other one that we were watching from yesterday was Pippin. I forgot about it today. It's so close to making a fresh all-time high. Oh, no, it isn't. That's not even an all-time high. It's a daily time frame. I had that alert set. It never hit. I was literally looking to short it if it refused to break out above yesterday. Not yesterday, the day before yesterday. Yesterday was a big bullish day. It was up over 100% yesterday. If it continues to do this, it's probably going up. It should have broke down right here. But what did it do instead? It went back to the upside. So now all these sellers are stuck. All the people that shorted based on this fresh breakdown, close lower, they got stuck on that short. So it looks like it wants to liquidate up in here. It's being manipulated more than likely. Confirmation, take profit, or stop loss hit. There you go. That's the perfect way to look at confirmation. I love it. Either you get stopped out or you take profits. I really dislike the giant inefficient candle holding up this entire area. Easily retraceable. I'm not sure what you're talking about. You could still be talking about XRP, seeing how you said that right after XRP. I'm not exactly sure what you're calling an inefficiency zone. If you're calling what an inefficiency zone the same way that the inner circle trader teaches inefficiency zones, then you're looking at this, I guess. Or you could be looking at this and calling all of that inefficient. I don't know. Don't know. Yeah, I mean, there's another way to look at it. Like today, right here on XRP, looks more bullish than bearish because you're still trading above yesterday's midpoint. So as long as that continues to be the case throughout today's session, it's going to look like the buyers are controlling price. So right there's yesterday's midpoint. So this is not inefficient. The inner circle trader teaches it that it is. It isn't. This is a breakout. That is not inefficiency. It's resistance. That's why it's so big. It required more volume to break through resistance. It's called a midpoint. I don't know why he calls it an inefficiency. It literally is the midpoint. The reason midpoints work so often in candlesticks is because that's how exchanges price the bid and ask. Through your positions are based on the mid. So candlesticks will build these midpoints. It's like a resistance when that occurs. So people would have probably been shorting at that point, and that's where the breakout occurred. So there was plenty of volume there. You can see it when you look at the session volume profile in a lot of cases. No volume there, I guess. So maybe that would be considered. It's definitely low volume nodes. I don't know. I know it's yesterday's midpoint, and that's typically where we look for support to hold. If you're looking for bullish continuation, that's where we would be buying it. Or looking for longs. Not necessarily buying it, but yeah, so depending on how today closes, based on what you got the last 2 days, if today closes like a very small range inside candle like this, it will look like the trade is to buy that swing low moving forward tomorrow. It might not be today, but tomorrow. You open, push into this low, and then stop going lower and bounce. Like, that's where you want to look for the long. For the expansion higher. But I'm good with that. I want the expansion higher. I absolutely want the expansion higher. I want a sell, and I want it right there. That would be a short setup for me if XRP can trade up into there. And boop. I'm going to wait for it to drop back under, and I'm going to hit the sell button. And then hopefully it will drop. But it might not. It might go back up and take me out. Because I don't know what price is going to do. And nobody does. But I would absolutely take that short in that scenario, because that is an absolutely perfect trade setup. It's so good. Oh, it's so good. They don't always work, obviously. But you could even make the argument that up in here would be a decent shortable opportunity based on moving average structure. You got a daily supply zone right there. That is, it's just like perfect. So if I get stopped out there, my next favorable position would be there. But I don't know that I would even take that one, because at that point, I would need to wait for a weekly close to see what the weekly does. But I know I like this. I might have missed it, but I doubt it. I doubt it. I think people are chasing this, and they shouldn't be. So there's your previous week open. I think you have people chasing here, or first starting to short here. Then they got stopped out. Then they started shorting, and maybe they eased up on it here. So price basically come back into this area. Very nice bullish reaction on it. I would absolutely love a short setup there. If it fails to make upside continuation beyond here, then I would even short it there. Because of what today is. Today is Tuesday. So the weekly high could already be in. That did happen on Monday. Late Monday. So that could be the week high. Might not be. Could be. Today could just be very choppy sideways. But I don't know that I would chase it down there. It would have to be an absolute perfect rejection. The week high is a better place to look for me. All right. Yeah, it's looking pretty good. DXY is dumping. Yeah, it did earlier. It also put in more downside continuation, but it has since rebound. So this was way earlier. What's your opinion on pound dollar? Pound dollar. It's very, I don't know. It's up today. Pound dollar's a short if it fails here. Pound dollar is a short. It's extended down in here. Clearly, there's not much supply here. But if it fails here today or tomorrow, if it trades up and fails tomorrow, it's a short for me on a technical basis. Give me 1 second. I'm not done yet. I don't love it because of where it is in regards to last month's range. So last month was a breakdown. Perfect. I could short it right here. So if it fails, if the short fails here, damn it. If the short fails here and it continues to push, then I would go one more attempt at the short up there. But I wouldn't love it up there because I would feel as if those things are changing. But for a trade setup today, I would have to sell. Right there. One spot 31930. That would have been the short side entry. It's the same entry that I just took on Fartcoin, only this one is better. because this one is under the 50. Little bit extended from the 21. I get it. It could definitely bounce. If it gets above that, it probably is coming up here. But this would be my secondary place for the short. I still have a short side bias, but above that, something has changed. Something is different. But it's an absolute, I'd short it today. Maybe tomorrow. Because tomorrow, like if you chop sideways for the rest of the day here, tomorrow might want to peak above, kind of like what XMR did, right? See how you traded sideways here for so long and then you peaked above and then dumped? Something similar. Trade sideways here all day, and then you get tomorrow, peaked, and then dump. That would be what I would want to see tomorrow. Today, you're trying to sell quite a bit of bullish momentum. So this was based on the news. The news was bearish for the dollar. But it's still a buying opportunity on the dollar, guys. No matter what the candle looks like today, no matter what it did this morning, it still looks okay to buy it. It's only down 0.2%. That is the standard pullback. Right? You could be setting the weekly low here. And remember, as long as you're above last week's midpoint, you have to have a bullish bias here. You don't have to, but if you trade the way that I trade, you do. Got to have a bullish bias here until you break down and start closing 4-hour candles lower. Then you can say, okay, this was a legit rejection. But for me, I mean, the news just pushed it down into here. This is where people would be looking to buy. If you're retail, you're selling this, right? That's resistance for retail. And now retail thinks they're right. They may be right. Sometimes retail does get it right. Sometimes resistance does hold. But I'm looking at it in terms of what have we done? What did we do last week? What did we do this week? Well, last week we broke out. This week we're testing last week's midpoint. So as long as that area holds a support, I have to be a buyer. Not only is that area holding at support, but you put in a bullish engulfing candle down there. That's probably going to be your weekly low. Or you might make one lower and then go. But the dollar is most likely going to be trading up into here. And because of what it did right here, because it got up there and then spent 1, 2, 3 days going sideways, giving all the short sellers plenty of time to let them build up a short position here. My short from here still hasn't been stopped out. Why else would it be up here? Now, on the dollar, it did liquidate those sellers. And now you could argue that it is going lower, right? But on USD Swissy, I took the short from that. I haven't been stopped out yet. There's a shitload of liquidity up here. So now all of these people think they're right. They're in the home stretch. I wouldn't doubt it if this thing don't break out today. Probably tomorrow, but I wouldn't doubt it if it happens today. And then when it does break out up here, you're probably going to see a few days worth of expansion. So let's pretend it does what I say. It goes up like this, right? Gets up in here, you're probably going to see a pretty big expansion up. See a couple sideways candles like this. And then you're probably going to see it just run. It's a big, big level, man. Once you get above that, dude, it's off to the races. Look at this. Next level of resistance. Boom. That's a huge chunk. So if it breaks out here, I would say it'll get here before end of year. Damn. Yeah. If we measured move this, where is it? Can't get it perfect. Just measured move puts you up in that area. So yeah, you're going to probably see multiple days of just up higher, like you got here, right? Just 4 straight days of upside. If you break out above all this stuff and get going, it's probably going to happen. It doesn't mean it will, obviously. It could still roll over here. I don't know that it's going to hold, but I would have a bullish bias on it as long as you're above 99.71. As long as you're above that, I remain bullish. And I would be targeting 101.977. So I have my short position on. Damn it. Here, I'll show you real quick. I have to log in. Hopefully it's just as quick as connect. It is. I don't know what I'm doing wrong there, but anyway. Here we go. And we'll wrap it up pretty soon. I know there's still some questions to answer, but so Forex right here. USD Swissy looks completely different than the USD, don't it? Looking at this, what do you think's about to happen? I've been holding this short since November the 5th. So the dollar just had a nice pullback, but what if it holds and breaks out? What do you think's happening here? Boom, boom, boom. It's going much higher. There's a, let's see, there's a monthly swing right there. Probably going to there if it breaks out of here today. But I held it because it reversed. I didn't close it because I know that these two positions offset one another. I get that. But I don't, the dollar's so choppy and it's been so choppy for so long, I don't know which way it is going to go. But ultimately, if it does break out of this multiple month range, it's probably going to have an extended move the same way this did. This was a very tight multi-month range. Once Bitcoin got going with steam under that low, look at it go, right? Watch this. So it tried to break, went back up, tagged this top, liquidated, came back, smoked it. This was it. Boom. This is the move the dollar is putting in right now. It's putting in that fake little and then it's going to boom. So this is probably boom. It's probably going up. But here, right? What happens if that happens on the dollar? We're coming down here on the euro. We're coming down here on the euro, and then who knows where. All these longs right here, they think they're safe. They still might be, and especially after a day like that, right? Shoo! They're golden. They're hoping that got so close to stopping them out. They're like, whoa, man. Now they've probably taken, because of this day, it's so big into the upside. Anybody that got long here probably brought their stops to right there. So now the euro doesn't even need to come all the way down here to liquidate everybody. It's just this set it up so perfect. I could absolutely see this thing roll over. But more than likely, I'm going to get stopped out on one of these two positions pretty damn soon. It doesn't matter to me which one it is that gets stopped out, just as long as the other one stays open for next month. All right? I've been in this trade since November. It hasn't gone anywhere in November. I mean, it did, and technically I could have taken profits down there, but the dollar didn't break down. It bounced, and it's back up to resistance again. So it probably wants to break out to the upside. But it is still in the range, and it definitely could come back down here. So I'm just trying to play for the breakout on the dollar. Whether it's a breakout to the upside, or if it comes all the way back down here and breaks out down here, which that ain't even in the cards right now. But the Swiss yen is probably a good short if there is going to be a risk off market, which don't look like it is going to be. Here's the VIX pushing on day lows. So you have literally taken out all of that gigantic move up. So right now on the VIX, unless it reverses after smoking that low and head back this direction, the risk markets are going up. It's breaking out here. I don't know what that's going to do to the dollar, though. But if you're going to see a risk-off market, you want to be long yen. And the best way to get long yen right now would probably be to short Swissy, buy the yen, or just short Swiss yen. This thing has been so bullish for the last several years. It's literally insane. Insane. The Swiss franc quit being a risk-off currency. But I was hoping to catch it on something other than the yen. But they just did a nasty or a big-ass stimulus package in Japan. So we don't even know how that's going to affect the yen. A lot of things could be changing here. Do you like Intel from here? Intel, INTL. Oh. What? INTC. Yeah, I mean, it's okay. It looks okay. Yeah, if it can hold that price, I could be okay buying it. I could buy it if it holds this price moving forward. Not today, but it still looks okay. This might be the buying opportunity, so I might have just missed it, but that's where I would want to be looking to be the buyer. If it, I don't know. I don't know. Intel was so cheap for so long, it should have been bought down here if it was going to be bought. Now you're going to have to try to pick the swing lows, and I would be doing that using monthly swings, monthly ranges. So I don't want to hold longs if you're trading under 33.50. As long as you're trading above 33.50, I'd be okay with holding longs. No leverage or anything like that. Just buy and own and hope it breaks back to the upside. But definitely this pullback was needed after 3 months of expansion. That was a volatile move back to the upside on Intel, based on good news. So I would want to see the range hold and then go. If that range holds, I like it higher. BIX coming off, yep, fresh day lows. Pingu has some constructive price action. Everything is constructive today. When it comes to Pingu, Fartcoin, and Pingu, Fartcoin, and Bonk, all three constructive AF. Here, you're up on the week. So that's a good thing. You've not been able to do that for a while on any of these. So it does look okay. Fartcoin looks the best, because Fartcoin literally took out last week's high. Fartcoin looks absolutely lovely like that. But it has to be able to maintain bullish pressure above here. It did nice bullish rip here the other day, and it ended up dumping hard. Now that it's back, it's probably going higher. But I had to take the short based on what it's testing. It's that simple. It does not look like that short is going to work. This is more bullish than bearish. You broke out. This was your last breakout candle. But this is a continuation candle. It's an inside candle, but it's looking more and more like you're going to see continuation. Like this. Right? Big break, continuation, pullback, break. Big break, continuation, pullback, break. But because it's the monthly open, I had to short it. I didn't even see that. I was shorting it because it liquidated last week's high. If I would have seen that, I definitely want to short it. Monthly open, yeah, gotta take that. But yeah, boss, what do you think of taking a short on XRP at daily res if it closes red? We like XRP a little bit higher. We're going to be looking to short XRP at 22.89. Last week's high. If it can fail there, we want to short it there. Next place to look for shorts on XRP, way up yonder. But for right here, right now, yeah, if it rejects last week's high, we want to sell it. So alerts are set. I want to short it right there if I get a chance. I'm not going to chase it down here. Do not open a short down here, because we're looking for it to come up here. S&P broke to the upside and is continuing. Broke to the upside and is continuing. So this looks like it's very constructive, man. This was a shakeout Like a massive shakeout. That's gotta piss people off. I know it does me when it happens to me. Nasty. Yeah. Markets are difficult to trade. Bitcoin is the only thing that has been super bearish, and it's probably done being bearish for a little bit. This is support on Bitcoin. It's still holding. If Bitcoin fails to go lower than that, this is where you want to look to be a buyer on Bitcoin. It is still holding. It's easy to buy it. Stop loss goes there. It's a wide stop, but if Bitcoin gets bullish from here, you're probably going to see an aggressive bounce. Back up into 93s. That's the next key swing. If it fails to trade under this point, I'd be buying it. It's not like a massive level. It's weekly support. Yesterday's open. It's the week open. It's objective price action. Bitcoin wants the bears right here to think they got it. Everybody that's shorting here, and I could, in theory, still believe it's going to break down, but not with what's going on with risk markets. Speaking of, I need to close that little trade before it gets too out of hand. But yeah, Bitcoin could absolutely hold here, and I would like it higher. I would love it if volume was confirming that is the likely scenario. It kind of is. I don't love this though. Ooh, I hate that. Yeah, I hate that 30-second delta. Absolutely despise that. I don't love the 5-minute deltas either. Yeah, I could buy Bitcoin right there based on this. If it holds, it's got to hold though. If the VIX continues lower, I want to own Bitcoin. Which probably means our Fartcoin short's going to get smoked. I don't know. This looks okay. If it could break down under here, I would like it a lot better. Yeah, this is pissing me off. This thing just fails to give you any kind of continuation at all. All right. And then if today closes red on XRP. No, I wouldn't be shorting it. I don't like to short on XRP anywhere but here. Like, I wouldn't short XRP anywhere but here. I need it up here. If it dumps without me, it's going to go without me. I don't have any edge on it anywhere else. It could, in theory, hold at like the 4-hour supply zone, which is right there. But the problem you get in with doing stuff like that is you start taking shorts on these smaller time frame levels. If they don't hold, and then you get up here, you're going to eat a couple stops before you actually get the one trade you wanted to take in the first place. So if it goes without me, it just goes without me. I'm okay with not taking it. I have no edge here, not knowing that the weak high is right there. But it could fail. It might not go back up. That's the one thing that waiting for a trade could ultimately screw you. Right? If it doesn't go back up, then you miss out on a good trade. So maybe as low as like 4 hours here, maybe you could look for shorts there, but I wouldn't press the issue. BNB. Oh. BNB's it's like nothing. It's kind of doing the same thing that Bitcoin's doing. It's struggling here at the week open to break down, which kind of indicates that the bulls are trying to hold it up. It doesn't mean the bulls will be able to keep holding it up today, but at least they're trying to now. So I could hold longs the same way that I feel about Bitcoin, I feel about BNB. If BNB refuses to go under 843, then I could get long. Stop would be like under this low right here, or under this low. It'd be like a longer term. It's not a scalp. It's more of a swing trade. It's going to take a couple days to play out potentially. But the weekly open is the levels that you should have been watching all day anyway. So something like that, right? That's how I would set it up. But it's got to stop like right there. I don't like where the point of control is on this one. The point of control kind of indicates that people are trying to sell it. You got a lot of volume up here, and then the point of control migrated lower, which indicates that the sellers came down after it. Because the point of control was here. See this yellow? It's way out here. This was where the point of control was. It went down, it hit the weekly open and bounced, and now they migrated lower. So they're looking to sell the lower swing high. This is where I would be looking to buy it, and I would have a stop right there. I would not be risking a whole lot of money on it, but because it's counter trend to long Bitcoin or BNB right now is counter trend. You are trying to buy a clearly bearish asset. BNB still actually looks better than Bitcoin because it hasn't lost its 50 EMA yet on the weekly. It's lost the 21, so I would already, this would have had me very cautious. But if it can hold support here, that would be a good bullish sign. On the daily, it looks bad. It's already been annihilated. You've lost the 200. You've got to pretty much oversold on the daily. That's not a great sign. So you're already trending lower. It's up to, like, the bulls have to prove it. But that's where I could buy. That's the only place I could buy. All right, you guys have a fantastic rest of your day. Make sure you guys trade safe, trade smart, and as always, happy trading, everybody.